Hello and welcome to Pro Trader Strategies market commentary for Friday, February the 7th. It is Unenjoyment Friday, the busiest day for economic data, or actually the most important day for economic data that we get throughout the month. One thing I want to talk about is you may very well recognize me as the Wolfman from mainstream media, where I've talked about the economic data, how that impacts the overall markets. Well, I do that here in these daily market commentaries as well. But I layer on top of there all the trades that I'm doing, when and where I put those on, win, lose, or draw. All right, so without further ado, please remember past performance of any trading system or methodology is not necessarily indicative of future results. All right, with all that being said, I should say, let's talk about the economic data across the pond. We got German industrial production. Remember, we talked about this before, time and time again. Germany and France, the most important industrial sectors of the European area. And we've got German industrial production, negative 3.5%, getting ugly over there. It was expected to be a negative 0.2. And then we got the French industrial production expected to be a negative 3, and it came in negative 2.8. So both of those numbers disheartening for any type of recovery going on over there. The last month's numbers were actually decent, but this month they just fell out of bed. And then here in the United States, let's talk about our non-farm payrolls, the unemployment numbers. We got the unemployment rate coming in at 3.6%, which is an uptick from 3.5, although labor participation rate is at some of the lowest levels we've had in history. So how that is upticking a little bit, people that are coming off of the sidelines or off the porch looking for a job, making that number uptick a little bit, despite the fact that we got non-farm payrolls coming in at 225,000 hires, expected to be 263,000 hires. So remember when we saw that ADP number, that was like knocking it out of the park. Well, this did just the same, over 225,000 hires, and well over the expected by about 60,000 hires. So really good there. Let me pull up some of the charts. I guess I got my I got my Delta chart up here all ready to go for the trades that I've done, but let me get some of the other ones up real quick. All right, there we go. We got crude oil up there now. As we can see here, crude oil coming off a little bit. Probably nobody's very happy today with the markets. We've got crude oil off a little bit by about 35 cents. Still up in that $50 a barrel range, but still struggling to get back up into the value area. We are actually starting to accept some price down at these levels. I think it's probably more buyers than sellers at this point. Anything below 50, you guys, is going to be hard pressed to stay below that threshold. We're going to see fracking start to slow down. We're going to see probably Saudi Arabia or the OPEC start to pull back on production to try and drive supply down and demand higher. We are seeing a glut of gas and other distillates coming onto the market. So that is what's really causing some of this weakness. And as you can see with the German and France industrial production coming off quite a bit, that demand is going to wane as well. So we've got a lot of levers and pulleys going on here in the crude oil market, causing that weakness going forward there. All right, we've got gold trying to make some moves to the upside here with the equities coming off. We can see with the bonds, they are moving higher, up a point on the day. This is a flight to safety because we're starting to see some equity weakness here. We can see the VIX moving higher, and that's based on the fact that there's a little bit of fear going on in the market and driving that higher. With the Dow Jones Industrial Average, you can see we are off by about 187 points, making this topping pattern a confirmation of a top there. So it looks like we are going to start to roll over. Probably my first stop would be guessing that we're going to go back down to 28,500. So another 600 points below where we are right now is probably where the market's going to want to roll over to, at least test that 9-day moving average there. NASDAQ also seeing the weakness down about 23 points on the day. Again, yesterday's chart kind of broke that pattern. We were seeing this setup there. Well, we got a rally to a new high, and that kind of broke that topping pattern that we would be looking for as confirmation. But today, starting to see some weakness here. A close near yesterday's open would be making this candle look like it's an engulfing pattern on yesterday. So that would be a very weak sign as well. So all of those things setting up for some weakness here in the equities. E-mini S&P is off by about 11 points right now. Off of the lows, but again, right now, below where we were yesterday, an engulfing pattern on yesterday's candle. That is a very bearish signal as well if we were to close right here, right now. And even a close near the top of that, still going to look pretty bearish at this point. All right, this is the overnight trade with the E-mini S&Ps. You can see overnight inventory was pretty short. No real attempt to flush those guys out today. It's been pretty tight range though, and as for a Friday, volumes seem to be light. I would have expected to see some more volume in and around these markets because of that non-farm payroll. Usually we start seeing some spikes in volume there, and not really seeing a whole lot today. All right, let's talk about the trades that I've done. We already kind of saw this chart set up already. And it is in Delta Airlines. If you guys remember, I have on a synthetic long with this trade. I'm long the June 60 calls and then short the June 60 puts to make that synthetic long trade. Looked pretty good yesterday off the start, but then we got a big sell-off, and I decided to go in here and do some covered calls on this, lower my overall basis on this. We got some pretty high implied volatility here, so it's a good opportunity to do that. And I went in and sold the March with about 42 days to expiration. Sold the March 62.5 calls in there for 46 cents. Just trying to lower my overall basis, especially with this bearishness. It's coming right back down to the point of control. I'm not too concerned about it really falling out of bed necessarily, but it looks like it wants to kind of migrate in and around the point of control. So if I can start to lower my overall cost basis on this, and we get back up into those levels, I can be profitable again. So stay mechanical. That's what we're trying to do here in this series of webinars here with implementation of options into our portfolio, building out a portfolio. And then what do we do when the market's not going our way? Well, we start to stay mechanical there and lower our cost basis on it. All right, so that's what we're talking about. Yesterday's was all about dollar cost averaging. How do we add stocks to our portfolio, our existing underlyings, and stay mechanical that way. So check that one out at protraderstrategies.com. That's on selling some short puts in and around some stocks that we already own. We want to dollar cost average and lower our basis in the meantime. Maybe you can consider it getting another little dividend in there as well. All right, so that's all I got for you guys. Check out that webinar at protraderstrategies.com. And that's all I got for you. Have a great weekend. And if you can't take that, take it easy.